The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, boys and girls. Looking good, feeling good. Boy, it's not often you see silver down 80 cents and gold basically unchanged. That's a really big surprise. As you can see, we are down sharply, as we should be, after closing as badly as we did on Friday. It was a situation where it just really was screaming, I'm going lower. When you stop and think that these folks have to make their minds up after the over the weekend, and you'll see that we've had some really big moves. We had two major gaps in the New York Stock Exchange Index this past week. The main was the one on Thursday, where we gapped below the lows of July. Now we are going to be below the lows of October now, which there's no one that can argue that this is not a bear market once we take out those October lows, because that was the big cycle that had been there for a long time. We've been going down for a long time, folks. The breadth of the market has been, just as bad as it can possibly get, and until today, and then you're going to see how bad it can really get, because we might get a pretty good rally here. We're due for, we're very oversold. You can certainly understand that, but just taking a look here at what happened on Friday with the new highs to new lows and the advanced decline line, and this is going to be a really bad one today. I don't think there's anything up today other than maybe a few stocks, at least starting out. Now, what I would suggest, if you want to try to, to buy something in here, keep an eye on the bond market. Because the bond market, we went up and we stopped right at the 786 on the bonds. That doesn't mean we can't go below it. We'll have to wait and see. But up at that 162.20 level was a pretty strong thing. Now, the market that's really surprised me today. But by the way, NASDAQ futures are limit down. They have to wait after a certain amount of time before they trade again. We just made new lows here in the S&P at 1886. There's some support at 1840, but whether that's going to hold or not, we'll have to. Remains to be seen. The bond market, I think, is the one that really should be watched, because if we get, boy, look at this euro run. Holy cow, 116.30. Holy moly, guacamole. Thing is really moving. Okay. First of all, we've had a couple of requests for stocks, and I can understand that, because everybody's a little bit scared of what's going on, and as they should be, because this is just the start of it, folks. This is nothing more than what's going to really be happening. And we have Apple. I'm going to bring this up because people have asked me to talk about it, and this is one of the major stocks, and we're going to be opening at a really interesting place here on Apple, because we had a target of 99 on this ABCD. We talked about this last Thursday, and right now it's trading at 100.2, so another point lower, and Apple will be at that target. Now, what the problem with the gaps is there's quite a few gaps, but this is the first really major ABCD correction that we've had in Apple in a long time. So if you're looking to buy something today, then that's the one I would take a look at, would be to look to buy Apple. It's a good stock. It's not going to go out of business, and the market is certainly oversold. So that's it. It's hard to buy in times like this, folks. And I'm certainly, I've got the service short as much as I can be short. So. And all I'm doing is sitting on my hands. But if I had to buy something, Apple would probably be the one that I would be watching the most. We've had several stocks now have made what we call island reversal patterns. I mean, really big ones. The last one to do it was Starbucks. We've been watching that for quite some time, and that also did that. We've got these, there's so many of it. Well, let's just do Amazon first, because that starts with the A, and we'll put it up, and you'll see that we've had a big island revert. Look at this euro go nuts. There's where the problem is. We got a currency war going on, folks. That's what the problem is the currency war. This is not a good thing. We'll see what happens here. Okay, here's what we got. We got, if you'll notice here, Amgen, wow, Larry, Amazon gap down on Friday, and it's going to be quite a bit lower today. And it left that island reversal at that spot. Now, we've had island reversals in Amgen, and oh my gosh, I've written them down and I've lost the piece of paper. I'll find it. Okay, but those are part of the things that we have going on. The question that we have here that is surprising to me is the fact that we have silver so low, and people are using gold as a flight to quality, and I'm not so sure that's the right thing to do. It might be, but this is what it is rather surprising to me. So my suggestion here for everyone is to watch the bond market, because if we get above 163 in the bonds, we can go anywhere. This market, we could be down an easy 1,000 points in the Dow. That's not a mystery. I mean, we have the NASDAQ is limit down. In other words, you can't even get out if you wanted to get out. So that's another bad sign that you have to be careful about. But the runaway market right now is in the euro, and we'll just take a look at that here. This one surprised me. I didn't think we could get above 112, and boy, we're trading at we hit 117 just a minute ago. So that tells us that we have gone a lot farther than this old cowboy thought it would go. And I'm not involved in it, but that's it. We'll think. Okay. One other question that someone had is about the British pound. The British pound is the weaker of the currencies, so that's the same thing as what we're looking at. Now the German stock market is down 6% today already. That's under a great deal of pressure. And I posted the chart for the German Bund, which is the 30-year bond. And as you can see, it's still trading at the 61% retracement that we hit, on Friday. We're just a little above that. We made a slightly higher high, but it hasn't really gone too crazy. Now, we're going to take a look here at this euro. I'm jumping around here because people are asking me questions, and I can't get it up. Moving here. There we go. Alrighty. Okay, there we go. We've got that. You can see up at the 117 area in the wow. Look at the gold takeoff now. I was wrong about that one. Well, they look like they're all running today, so we'll see what happens. Anyway, they're all going crazy today. Okay, let's take a look here quickly at, we've got to do one thing here. Let me answer this one question. I got to read it first, and we'll see where we are, and we'll go from there. Hold on here. Okay. All right. See, it's really strange how the bonds are selling off, and the market is still rather weak. That's rather surprising. I think the two things to watch today are the euro and the bonds. That's what I think the thing is that we're looking at. So we'll see, what's really happening here, with this. That we still got the NASDAQ is limit down, and we'll see if that's going to make any sense or not. What I really don't understand, and that is the fact with silver down as much as it is, you got silver down almost 65 cents and gold up $5. I've been trading for 55 years, and I've never seen that. So that's another indication that this is interesting times, no matter what. So keep that on the back burner to look at it. No matter what, we're going to have some wonderful trading markets, for the rest of this year for sure, but we'll get through this. I think we're almost limit down. Yeah, I think we're limit down now in the S&P too. So that's lock limit down. This is setting up. We're down 849 in the Dow Jones, 852. That hasn't gone limit down yet, but that's the other. This will be Panic Monday. I don't think there's any question about that. It's the big $64 question is how far down is it going to go and when does it bounce? Which we will get a bounce unless it's the end of the world, and I certainly don't think it's that. And I could be wrong about that too. Who knows? But we've had collapsing commodity prices, for so long, and China has been bad for so long, and we've had bad advancing decline lines for so long. I mean, there's no way anybody should be heavily long this market if they're listening to TFNN. I mean, Basil has been talking about it. John Logan has certainly talked about it. Tom has been on his soapbox talking about it. I've been talking about it. So a lot of things have told us that, we've definitely turned, down big time. And this is a big one, folks. The guest that John Logan had from Hong Kong, he was looking at 1640 in the S&P as the first objective. Frankly, I think that we should have some support at 1840. That's the number that I was looking at today. I'll bring this up to show you right now we are lock limit down, so there's not anything that you can do with this at this point. But we'll put the daily up, and you'll be able to see it here that we've gone below the 786. Wow, this is even broken below the drop of the October low. Okay, we've got someone calling in. Thank goodness. Mike from Toronto. How are you, Mike?
Yeah, pleasure to speak to you, Larry.
Thank you. Good talking to you. Hey, listen, if we come to the break, stay with me, and we'll finish the.
That's fine.
We'll finish after the break. So go ahead. What's your question?
TBT.
Yes.
Buy of the century.
On
a Black Monday.
If you had to put a gun to my head, I'd say yes, but I'd rather see the close today because of the fact that the bonds hit that number and the notes hit the number, the 786. Yeah. And I didn't think they would get above that, but the German Bund is, it's not reacting well. It's not. There's no flight to quality or anything in Germany, and that's a big question mark in my opinion.
Yeah, and nothing is the TBT was flat on Friday. I mean, it was only down 12 cents. You see, there's a gap from February at around $39.
Well, I think that people that are buying bonds and notes here as a flight to quality are making a bad mistake, but that's just my opinion, and that doesn't count for much. So.
Yeah, but in previous shows, they always mentioned that charts like to fill all their gaps. Okay, and if you look at the chart, there's one final gap from February the 2nd or February the 4th. It's around $39. Yeah, so I figured maybe they'll somehow push it down to that level before they reverse trend. From break.
Oh, stay with us, and we'll see where we are. Okay.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back on with Mike from Canada, Toronto. Mike, I posted a chart in there for TBT, and as you can see, we've gone below the 61% retracement, and we haven't opened up yet, so it's going to be going to be a lot lower than that. So I don't really see anything to do yet, but waiting a day or two, you might get a better chance to do it. But this is a really hard day to do anything when you've got the futures lock limit down. We have a question from someone in Dallas about that. Basically, the exchanges have rules. There are trading limits on the downside. They're based, we posted those into the Tiger Den today, and it shows that after it's down a certain amount, there's no trading for half an hour, then they reopen. That doesn't mean they're going to reopen a lot lower, because sometimes, there's a lot of buying down there, and then when they open a lot higher. But, right now you've got the Dow down 850 points, and that should be close to a bottom today, because the drop yesterday, Friday, was 5-something. And if you multiply the 500 times the 1.618, you're going to come out to here. But anything more than 1,000 points down in the Dow could go 1,500 points lower without any trouble at all. So those are some of the things.
On a 30-year Treasury, you mentioned 163. Okay, as a short-term upside target. If it exceeds that, what does the Fibonacci extensions show?
Oh, up to
we're at 162.14 right now on the September contract.
Yeah, we could go to 164, 165. The notes they're right at their number now, almost at 129.21, and they're very, very close to that too. So the markets are very jittery. People are jumping around, just looking for something to do, and that's probably the best thing to do is for you to just stand aside for a little bit. If you're short, you shouldn't do anything. If you're long, you should be very, very selective what you want to buy. I said Apple looks good at $100, but you've got to use a $5 stop on that because it could go to 80.
80, really?
It could very easily do that.
It has $26 in cash per share.
Well, that doesn't mean a lot when you have a margin call facing you. So you can't really, we'll see what's happening. Mike, stay on the line here. I've got to answer a question for someone. They ask about when the market is limit down like it is, if you have an order to sell and it's lock limit down, when it opens, it could open sharply lower. In other words, we're trading right now in the E-mini S&P is trading at 1870. It might open at 1850, and if you had a stop at 1868, you're going to get filled at the 1850 level. That's where you're going to be filled. So you have to remember that's what'll happen, during that time, if it in fact does happen that way.
So on the Treasuries, on the 30-year, if it exceeds 163, what's the next Fibonacci extension? 165?
165.5, I believe.
165.50.
Yeah, wow. 165.50. Yeah, it's it could easily do that.
Yield down to
if
about
it's real
what?
Crazy. Yes, it would. Well,
where would it take the yield down to? Under 1%?
Oh no. The yield at that point would probably be 2.5. I think we're 2.7 right now, so it'd be right around 2.5, I believe.
And what's the historical lows for these? Where we would be at historical lows?
Oh,
on the yield.
Well, the yield would probably be around 2.4, 2.3. I believe 2.3 when the bond hit. See, they changed the September bond. That contract had changed over. The specifications were different, and so what they had to do was they had to go over and find out, how to change that. And so it was September was the maverick month. When we go into December, we're going back to the old month. And so everything will be okay. So that is equivalent to about 2.4, I believe, is the lowest the T-bill or the T-bonds yielded when the market was back at 160 2 years ago. But see, all we're doing now is we're making a 786 retracement of that move. That's what we're doing.
Oh, okay. Well, thanks for that insight. Okay. Well, I hope you got your hard hats and rosary beads there beside you.
Oh, I'm fine. I'm just sitting here watching to see what's going to happen here.
Yeah, and so, they said in 1987, it's a bull market for cardiologists.
This is true. This one's going to be a bull market for proctologists, it looks like. Well, we'll see. Thanks for calling in, Mike. All right, we have another question from another listener here, and we will bring it right up, and it's about one of our favorite stocks. If you hold on one second, I will pull it up. It is, I believe it is called Netflix. So we got a break here, and then we'll be right back. Hold on, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about the market being lock limit down when we were on the air with Mike. And it was trading at 1870, and when it reopened, it opened at 1850. So if you had had a stop at 1868, you were most probably filled between 1850 and 1846. That would be my guess. So you should understand those ideas of what's going on. Now, we have the NASDAQ is now lock limit down again. For the second time, down at 3908. So we are in definitely a panic mode. Whether this is going to be the big panic or not, I don't know. But the market is so bearish, and it's been bearish for such a long time that it's really difficult to to try to do anything with this. Now, I wanted to show you one of the reasons why it's best to wait when you're doing some of these trades, because we talked about Apple as having some support around the 99 level, and as you can see here from the open, this morning. The market, it opened, way below that. So when you have days like this, you don't have to try to be a hero, and try to buy something like that. If it would open there and stayed there for a little bit, but that's it. When it gaps down like this, look at the gaps that it's had on it, folks. We have reached in a place in the market that no matter what happens from here, an event horizon has occurred. The point of no return has been passed. When we gapped down last Thursday on the New York Stock Exchange Index, that had to be the strongest signal that a person could ever ask for if you were bearish. We talked about that quite a bit when it occurred, and it's just been cascading down. Now we're over a cycle bottom today, a small one. I expect that we're going to bounce here either today or tomorrow. We'll get probably a really substantial bounce. But even if it's 2,000 Dow points, you want to be looking for a place to get short, because this is just the beginning of one of the worst bear markets. It'll be worse, I believe, than the one we had in 2008, and it might equal some ones that go back, much, much farther in time. So just remember that that's what we have going on in these markets. We're almost at 117 in the euro. It's going to be interesting to watch the euro at 117.27, because that's an expansion off that last weekly high. So we'll be able to see if that's going to be the case. Now, we did pop above the number in the bonds. At the we did hit 163. If we close above 163 today, then I think we'll probably have a heck of a run. And stocks will probably go a lot lower today, but we should be bottoming somewhere today. It's hard to pick a spot, to bottom. I mean, Apple has already rallied $10 from where it opened. So if you were to buy, you tried to buy it there at 99, you'd have been filled about 93, and it's trading at 99 right now. Whether that means much or not, I don't think it does. But keep an eye on the bonds and the euro. Those are the ones that you want to watch, because that's where the money that's where the money is. The stock market is really a small fraction of what we've got going here, folks. This is all about debt. It's all about debt, and this is this is why I don't believe you should be buying, bonds and notes in this area, because you have a situation where this stuff is no better or no worse than the stocks that people are buying, because there's much, I think it's 10 times more bonds, it's more than that, than stocks. And the problem is in the bond market because of the free credit we've had from the Federal Reserve during this time. So keep this in mind as you're doing this and watching these things unfold. But you don't have to be a rocket scientist to try to trade these markets. You want to wait and pick your spots, and that's the best time to really do it. What happened Friday with the market closing really badly, it was a situation where we had, gap downs on Wednesday, Thursday, and then closing right on the low on Friday. I mean, anybody how could you be long going into a weekend like that? And then what happened was the market opened slightly lower. In London on Sunday night, the market was actually trading about flat. In fact, the DAX was up a few points. Now the DAX is down over 6%. But early Sunday, it was very, very quiet. It didn't come unglued until around 9:30 at night in New York on Sunday is when China opened, and that's when the whole thing, sort of came unglued. Now, we did have that little run up here in the bonds, and now we backed off. Bonds are jumping around a point at a time, which is enough to scare anybody. So we'll see. We've just come off limit down on the NASDAQ, and that was down over 200 and something for the day. So don't be surprised if we get a pretty good rally in here, because the market is grossly oversold. But what we want to do is we want to find a place to add to short positions, and that's really what we should be trying to do, is what I would be thinking we should do. Okay, someone's asked for me to discuss the NASDAQ targets, which I'll be happy to do. Just takes me a second. The best way to do this, I think, is to bring up the daily here, and you'll see that so far the NASDAQ just now, which has been the leader of the pack, just now made the 786 retracement of the low in October, almost to the exact penny. At the low was 39. What was our low here? 39.08, and 39.04 is the 786 on the long-term chart. So this might be the spot where we hold on the NASDAQ for a chance. Now, everything else is far, far below that, but the NASDAQ had been the leader of this. I'm just giving you a price, folks. I'm just looking at this. Whether this holds or not is highly suspect, because we had wide bars on Thursday, Friday, and today, and we gapped down again today, just like we did on Friday. So it's just a little bit. We've rallied 50 points in just a matter of a few seconds, so that's a sign that something has most probably happened. So just watch that as it proceeds to go through the rest of the day. But we are going to get a good rally, and if we get a rally here, and I think we will over the next few days, all we need to do is we need to see if it's going to well, see, the 382 rally would just get you unchanged on the day. You'd have to rally 100, and you'd have to rally 200 points in the NASDAQ just to get unchanged on the day. So that's what we'll be watching for over the next couple of days, is a 200-point rally in the NASDAQ, and about a 70, 80-point rally in the S&P, maybe even 90 points, and then you want to look to get ready to go short. This is just the start, folks. What's happened is the market caught the people that handle the money by surprise. I mean, a technician doesn't understand, or is not supposed to understand, the fundamentals that are supposed to be about the money. All he's doing is looking at the charts, and the charts were screaming at us that you had to be bearish. You had this terrible breath that we talked about every single day. Basil has talked about it. Steve Rhodes has talked about it. John Logan, Tom O'Brien, everybody has. I mean, it's just been worse and worse. And we had collapsing commodity prices. And we had a problem with China. I mean, all of those big red flags. And yet the VIX wouldn't even budge. I mean, the VIX would do nothing. We've rallied 100 points in the last 30 seconds in the NASDAQ. That's a good sign. So that could be the bottom. That's 116 points we've rallied. So that's a good sign. Maybe the end of the world has been put off for a little bit. The bonds have been saying that this is not the end of the world. That's the bottom thing. Let's take a look at the VIX here and see how high we got. See if we got in. Whoa, we didn't get to 30 yet. I was surprised. We did get above the whole high. Well, even the VIX is not. See, we haven't even taken out the October highs yet in the VIX, so that's another, hold on, let's just get this, put this up here, and we'll see where we are here. So we'll see if that's going to mean anything, but we did have a little bit of a rally here. Now we rallied 126 points. We only need another 200 points. We'll be even on the day in the DAX, in the NASDAQ, so we'll wait and see here. What happens. So, okay, that's what we're watching so far. Not much else is going on. The bonds went a little above the number up there. We just about hit the 163 level. We went one tick above it, and now we dropped 1.5 points in a matter of 10 minutes. That's another reason that's telling us that we're probably getting ready for some type of a really good rally in here. I want to take another quick look at the German Bund, because this is the equivalent of what they look at across the pond when we're watching the our 30-year bond. And it is above the 61% retracement, but only by a couple of pips. It hasn't really done very much with this. So we'll see if this is going to be the case or not. We'll have to give it a little bit of a chance to see what's going on with that. Okay, we had another question here about one of our stocks. I have to bring this up for you. Give me a second and I'll pull it up. And that is the IWM. and we want to bring it up because we are at the 786 in the IWM also from the old low that we had way back in October. That could also mean something. We've had several big gaps which will be filled. The $64 question is, when will they be filled? So we did get down there in the IWM to complete that pattern. But this thing has been, extremely bearish. We're way oversold. We are going to get a rally here. The question is whether we're going to get it today or tomorrow or the next day. We'll have to let the trading gods tell us. But we are in a bearish situation, folks. In all of my years of trading, I have never seen this many bearish patterns, and I mean really bearish patterns that should scare the bejeebies, out of anybody. Let's just put this chart up, and you'll see what's happened to the DAX. Has rallied. DAX rallied 150 points in 7 minutes. So you can see the market is extremely oversold. So at any time, we could, extend some of these rally spots, and we might even be unchanged on the day before it's all over. I know it sounds like a long shot, but with the market this oversold, it's a possibility. I wouldn't make any bets on it, but we are long term. It's over. It's the party's over. You want to learn to trade from the short side, and I think that's the area where you would probably do your best trading, would be my guess. I am just totally shocked that we have gold up on the day and silver down 70 cents. That to me is a real outlier event of a great magnitude. We have one other market that's acting really well, given the fact that it's the end of the world has been discovered, and that is the wheat market. We had a really nice couple of nice trades in wheat over the last few days, and last night we made a really nice Gartley pattern in the wheat down at the 490 a bushel level, and we've already rallied 10 cents a bushel. And this is in the face of the world coming apart. I mean, you got the dollar going into the sewer. You've got silver down 70 cents, copper down 8 cents, and yet the wheat would not go down. And so that's what brought my interest to this, because it's been in a really good pattern formation for the past 2 or 3 weeks. So it was holding up, really nicely to where we thought it was going to be. So the things to watch today are the euro and the bonds. That's where the money is. Remember the old movie with Dustin Hoffman and Robert Redford, the Watergate film? I can't remember the name. All the President's Men, I think that's what it was. I don't even remember, but I think that's what the name of it was. And they said follow the money, and that's what you have to do. So when you see the money not being afraid anymore, like in the bond market, and then also in the euro, if the euro starts to weaken after we hit that 117 level, then you'll say, okay, there's a little bit of short covering coming in, and you'll see the market reacts. I imagine we're going to be off the bottoms before the end of the day. If we close badly again today, that means, the crash is still coming. And whether this is the end of the crash or the beginning, I'm not really sure. All I know is that we're going to be a lot lower in October than we are in August. That much I feel very strongly about, because the Bradley model is, when it's right, it's really right, and it's been spot on. So we want to pay attention to that and see what happens, from that level. So that's what we're, focusing on today, are the notes and the bonds and the euro. Those are the ones that will give us an idea of where we're standing with some of these things. We've rallied about 70 points in the S&P, which is, see, how much did we rally? Yeah, we rallied a good 70 points in the S&P. So that's another good sign. And we did hit the 117. The high in the euro was 117.14. I was looking for 117.20. Okay, we'll take a little break here. We'll get back and review what we need to watch for the rest of the day. Wow.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I just want to reiterate what I've mentioned before: is to keep an eye on the euro, and be really careful no matter what you're doing today. As you can see, when the market goes limit down, you're trapped, and you're going to get a terrible fill. Like if you'd have, had a sell order in at 1870, and the market's locked limit down. When it opened at 1850, so they took an extra $1,000 away from you. Now, what's happening in the last 15 minutes is, we've had a rally of about 80 points in the S&P, and now we've backed off 30 of the 50 of those points, we've come right back down to the 61% retracement at the 1863 level. So this could be the first sign that we're looking at some support. And the bonds are now lower than they were before the big run-up. They were trading at 62.01. Now they're 161.26. Also giving an indication that something is really happening in some of these markets with a great deal of gusto, as we already know. We'll be watching really closely today and tomorrow for what the bounce is going to be and how much it's going to be. And most probably, the bounce will be a little bit more than we expect. There'll be somebody come in and say, look, this is the bottom you've been waiting for to buy. You want to buy on weakness. Remember 1987? That was the greatest buying opportunity of the 1980s, and it was. Yes, it was, because it was even better than 1982 because the market had already backed off during that time. So there's that possibility that people will come in and start to say that, and then we want to watch to see what's going on. But frankly, if you look at these technical patterns that we've been sending out and talking about here at TFNN, they are extremely bearish with all of these island reversal patterns that we've had now. It's really quite a scary thing when you look at all these patterns, what it means, longer term. We've already seen the long-term charts on the Dow with that 5-point reverse point wave. So if you try to protect yourself and your capital as best you can, folks, because these markets are going to go a whole lot lower than we are now. Maybe not today, but in the next 2 or 3 weeks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.